Fantastic. Thank you everyone for joining us this evening. For those of you who don't know me, I'm Laura Piercy. I'm one of the Associate Directors of LaSwap, and part of my remit is around UCAS, pathways, and apprenticeships and other things that our young people do post 18. Um, yeah, I'm post 16. This session this evening is just about student finance. So, it is about applying for finance to support young people when they go to university. It is a slightly longer session than I normally do, partly because this can be a little bit complicated, as well as the basics around student finance, how the different loans work, all those kind of things. I'm also going to talk a little bit at the end about different circumstances around finance, about other sources of funding, and some other bits and bobs. You will find my email at the end of the slides. So if you have any specific questions about any aspect of finance or UCAS or your young person's journey, then do feel free to get in touch with me. During the webinar, if you've got any questions, please use the Q&A, which is at the bottom of the screen. If you just pop your questions in there, and then at the end of the webinar, I'll go through the questions and I will answer anything. Let's get going. Fantastic. So hopefully everyone can see my screen now. Please do alert me in the chat if anything goes wrong. So I am going to start with the very basics. Again, I apologize if some of you already know a few bits, but it's just to give everybody the opportunity to to start from the very beginning to understand everything. Student finance is the loan system that we have for our young people going to university. It's Student Finance England, sometimes abbreviated to SFE, and they provide government-backed financial support to students in England. That is for students who are from England, and that is SFE are the loan providers, whether they go to university in England, Wales, Scotland, or Northern Ireland. There are two main costs for young people when they're studying. The first is their tuition fees, which have to be paid to the university in order for them to go to university, and the second one is the living costs that they have to support them while they're there. And so student finance covers both of these things because it's actually two loans rather than one. The first loan is a fees loan, which covers the exactly that, the fees or that are charged by the university for the course. And the second loan is called a maintenance loan, and that covers living costs for the young person. And the amount that they can borrow in total depends on various things. It depends on their home circumstances, the course they're studying, and where they are studying it. And it is important to remember that all monies from SFE are a loan, and they all do need to be paid after graduation, unfortunately. So I'm going to start off by talking a little bit generally about who's eligible and what student finance actually is. So all British citizens doing their first degree in the UK are eligible for student finance, as are all EU citizens with settled status and some other groups as well. And the eligibility for the loans is based on the student status. It is not based on the parent. So the student themselves has to be eligible. If you're uncertain about whether your young person qualifies, there are quite a few different places that you can find this information out from. Some of them, like the one at the bottom, the UK government one, the government website is long and quite complicated. The complete university guide above that is quite clear and quite a simple guide, which is a good place to start. Don't worry, by the way, sorry, I should have said this first. Don't worry about writing this down or saving this. I can send you these slides afterwards. It's not a problem because there are quite a few slides with a lot of information. So the maximum tuition fee that a uni or college can charge from 2025 is £9,535 a year. But the amount of that needs to be paid up front is absolutely zero. There is no upfront payment in terms of fees for a young person going into university. This is the maximum amount. Unis do have the option to charge less if they want to, but they never do. So do expect the fees to be that much. There are very few cases in which they are not. So we'll start off by talking about the fee loans. As I just said, the fees are 9,535 a year. for each year of the course. If it's a 3-year course, times three. If it's a 4-year, 5-year course, you get the picture. And the full cost of that is covered by the fee loan. And that is the amount of loan you get is linked to the length of your course. So a standard undergraduate course, 3 years, you'll get 3 years worth of loan. If you're doing a course with an integrated foundation year, 4 years. If you're doing medicine, dentistry, you're 5 years. It fits to the length of the course. Now, students never actually see that money. It goes straight from the government to the university, so it never hits the student's bank account. They never actually see it. They just know that they have borrowed it. By going to university, they agree that they have borrowed that money. And what that fee covers is the cost of the teaching, the administration of the course, the university facilities, libraries, IT, student support, all that kind of stuff, all the costs that are borne by the university for teaching your young person. However, it doesn't cover any personal costs to that student. So it doesn't cover living costs, it doesn't cover textbooks or course material, most course materials. It doesn't cover personal tech, laptops and things like that, etc. They are up to the young person to supply. As I've already said, there's no fees up front. They don't have to borrow the whole amount if the young person doesn't want to. For example, if someone is able to support them with those fees and they only need to borrow part of that amount, they can borrow part of it. That is up to them. And the tuition fee loan is not linked, it's not means tested, it's not linked to household income. Everybody gets the same. So you don't have to, as a parent or family member or carer, you don't have to supply any information to Student Finance England in order for your young person to get their tuition fee loan. They get that because they're going to university. That loan is repayable, but only when the student's income is over £25,000 a year before tax, and there'll be a section later on repayment where we'll go into that in a bit more detail. So there has been quite a bit in the last few months in the news about fees. You might have heard that fees are being increased from 2025. It's been quite a big headline, and it is true, but it isn't by very much. So they've gone up by 3.1% because of rises in inflation. So what that means really is that fees have gone up by £285 a year. Prior to that, fees hadn't gone up for about a decade. So it is, in a way, it is an overdue rise as much as it's not a welcome one. And tuition fees may increase each subsequent year in line with inflation. But that also means that maintenance loans, so the money that you get for living costs, will also go up by the same amount. So this year, as you'll see in a second, those maintenance loans have gone up by up to £414 extra per year, depending on how much maintenance loan you were entitled to. So yes, fees are going up, but maintenance loans are also going up a little bit, and it isn't very much over compared to the maximum amount of the loan. So moving on then to maintenance loans, because these are a little bit more complex. So this is the money that's available to help students with any other living costs that they have as part of their degree. So that is their accommodation, their books, their travel, clothes, food, anything else that they will need to pay for. And all eligible students can get some maintenance support, and the amount they get depends on where they live, where they study, and it is also depends on the income of the parent or family with parental responsibility, if you choose to have your income assessed. Now, different to the fees loan, that maintenance loan is paid directly into the student's bank account. So the student is responsible for managing that money entirely, including paying their own rent. So they need to, again, there'll be a bit more on this later, but they do need to be aware that they will need to look after that money. And again, that loan is repayable under the same conditions when you leave university and your income is over £25,000 a year. So how do students get the money? So the loans are paid straight into the student's bank account in 3 installments during the year. So they get a lump sum in September, in January and April. So one lump sum per term, essentially. The September and January ones are the same. And then the April one is slightly bigger because it encompasses the summer period. So it's a little bit more because of that. So how much can they get? So again, this is means tested. If a student lives at home, So regardless of where in the country they study, if they are living at home, they can get up to £8,877 a year. If they are living away from home, so in private accommodation or university halls outside of the Greater London area, they can get up to £10,544 a year. If they are studying in London, but they are not living with their family, they can get more to reflect the fact that London is more expensive than most of the places in the country. And finally, students who are living and participating in study abroad can get up to about £12,000 a year for that as well. So this, again, I'm not going to read this whole table to you now. This is a more detailed breakdown. As you can see down the left-hand side, that's the approximate household income, and you can read across there. If you look down and find approximately what your household income is, you can read across and see about what your young person will get depending on each circumstance. So if your household income is £40,000 a year and your young person is going to university in Leeds and they're going to go and live in Leeds, then they can get up to £8,284 a year. Remember, of course, that the fees loan for the 9535 isn't means tested. Everybody gets the same on that one. So how do they assess you? How do they work out how much money your young person is entitled to? So it is based on the joint income of the student's household. So the place that they live the majority of the time. If the student's parents don't live together, then it's based on the parent they live with most of the time. And if that parent lives with a partner, it also factors in their income because it's a household income that is looked at. That is not the case. The student's household income does not include their parent or carer's income if they've been financially independent for 3 years, if they've been married, if they are a care leaver, or if they have no contact with parents for a considerable amount of time, if they can apply to be considered an estranged student. Now, that obviously doesn't apply to most students currently in sixth form. This more applies to mature students, but there are a few circumstances that you may wish to look at, and that link at the bottom goes through all the different ways that independent students who don't have a parent or a carer household can be assessed for their loan. What counts as household income? So it's any income that the legal parents or guardians receive within the tax year, and it's the previous full tax year that SFE looked at. So it includes any kind of earnings or benefits or rental income or pensions or anything of that sort. As I've already said, a cohabiting partner that a parent lives with is classed as household income. However, if there's also other adult siblings living at home, that is not taken into consideration. So, for example, if a student has an older brother or sister who is working full time, who also lives in their household, then that is not considered. So they're the basics. And I'm going to move on to talking about how you actually put the application in, how you apply for the finance. Excuse me. So that is the address to apply for the finance. If you type in apply student finance into Google, it will be the first thing that comes up, I believe. And it's almost like I planned it. Student finance actually opened yesterday. We didn't know. It always opens in March. We don't know exactly when it's going to open, but by an amazing coincidence, it opened yesterday. So you can apply as of now for student finance. If you were applying for a fees only application, so if you're not doing the means tested bit for maintenance loan, if you don't want the maintenance loan at all, if you just want the fees bit, then applications for that open later in March. If your young person has submitted a deferred application, so they're starting uni in 2026 instead of 2025, they will need to apply next year because you always apply for finance in the year that you need it. So they can save these slides and apply next year. So before you can do anything as a parent or carer who's supporting an application, the student needs to do their bit first. So they need to log on to student finance, they need to enter their details, and they need to register before you can really do anything. So encourage them to do that as soon as possible. That link there to the student toolkit is quite handy. It gives a nice breakdown of different things that they might need and different sort of breaks down different parts of the application as well. So they will need to provide some evidence. The best thing they can use to prove their identity is their passport. If they have definitely if they have a British passport, because they can just use the passport number to provide ID for themselves. If they don't have a passport, they will usually need to submit a birth certificate which can, I believe, be uploaded straight to the website. I don't think you have to post it anymore. If the young person is an EU national, they will need their EU settlement share code. And if they're from anywhere else in the world, they will need more information then, usually a passport, a residence card, and other information. But the finance website will tell you exactly what they need. The student will also need the code of the university that they're applying to. So that's usually a letter and some numbers, and again, a course code, a combination of letters and numbers. That should be their firm choice. If they haven't yet decided, though, really they can put anything down because they can go and change it at any time. Once the initial assessment's been done, if they change the details, it's really easy for student finance to adjust the loan up and down if the circumstances change. It's the initial assessment that's the bit that takes time. So don't worry too much about that being super accurate at this stage. They will also need a bank account and bank account details that have to be in their name. The loan can't be paid into anyone else's bank account. But again, if they change that in the next few months, so if they open a student bank account, for example, they can just log in and change it. As long as it's before the loan is paid, it's easy. They will need their national insurance number. And they will also need the email address of the person or people supporting their application. So that's usually a parent or carer, usually you. So please use an email address that you check regularly. There's a nice link here that has all the information for parents and partners, but in your case, parents and carers who are supporting a student finance application. Please do remember, though, you do not have to do this. It is not compulsory. You do not have to send in off any information. You don't have to give your financial details. You don't have to be means tested if you don't want to. It is up to you. If you choose not to, then your child can still get the minimum amount of maintenance loan, which is currently £3,907. That is not means tested, so they will get that regardless of whether you support the application, and they will still get the full fee loan as well. So there is still money available if you can't or don't want to support the application for whatever reason. So once your young person has registered and set up their account, you'll get an email that will say, please come and support your child's application. You will then need to create an online account for yourself, which you link to your child, to the student. And you will then need to provide, if you choose to, information about your marital status and your previous tax year income, both household and personal. So HMRC will check that information, check that it matches their records, which usually takes a few weeks. It's usually pretty quick, especially if you do it at this time of year. It doesn't take forever. Most of the time, the vast majority of people don't need to upload or post off any evidence. But if they do need something from you, then again, 9 times out of 10, you can upload it to the website, scans or photos to the website, rather than having to post it off. That can take about 6 weeks if they need any evidence from you, if they want to review it. As I said, the evidence will be requested from the previous full financial year, so 2023 to 24 now. And once Student Finance have confirmed all your information, they'll let your child know. And the student can also check the progress of their application online, so they can keep logging into their account and see what the status of their application is. The deadline is the end of May. Now, it's a deadline in that they ask you to apply by that. It's not a deadline in that it closes, because student finance doesn't close. In fact, you can apply for student finance up to 9 months into the year that you're doing the degree. So, for example, if a young person decided that they didn't want to apply for a maintenance loan because they didn't think they needed it, but it gets to January and things are a little bit lean, they can then apply. But obviously, there will be a delay to them getting the money and so on and so forth. And we do encourage everyone to apply as soon as possible and meet that end of May deadline, because that's when the student finance guarantee that if you apply by then, they will have the money by the time their course starts. The later in the year they leave it, the closer to the start of term they leave it, the more likely it is that they won't have their money to pay their rent at the start of term, or things might be a little bit tricky. They don't need to have a confirmed place in UCAS to apply for student finance because they can change those details at any time. So we do encourage earlier applications. If they change their mind, so at any point up to the start of term, if they change their mind, the application can be cancelled really easily. They can log on and just say, I'm not going to uni, I've changed my mind. And then they're not given any money, they don't have to pay any back. And if they decide to defer and they get an agreement from their university to start in 26 instead of 25, then again, they can log into student finance and they can change it to say, I'm deferring. So I'm going next year instead. And it will pause their application and they'll need to log in the year after and finish it off. Again, just a reminder that the loans are not compulsory. Students can apply for both. Part one, it's up to them. We do recommend, of course, that it is better to have the money and pay it back early if they don't need it, rather than get into a financial hole and not have it. But circumstances vary student by student. So the miserable bit, the sad bit, which is paying it back. I sound quite glib about this, but I am actually really aware that this is quite scary for a lot of people. It's quite intimidating. It's quite off-putting. I'm hoping what I can tell you this evening is reassuring, and reassuring for you and reassuring for your children. So there's nothing to pay until after graduation or leaving university. If you leave without graduating, you do still have to pay any loans that you've taken. Everything that they've borrowed, so the fees loan and the maintenance loan for all the years that they've been at uni, is brought together into a lump sum, and that is what the repayments are calculated on. The repayments are based on the student's salary. They are not based on the amount that you borrow. So I'll explain what that means a little bit more in a second. So they don't pay anything back until their income is over the set threshold, which is currently £25,000 a year, so £2,083 a month. And they pay back 9% of anything that's earned over 25 grand divided by 12, one payment per month. So if they earn, as you see here, bang on £25,000, they don't pay anything because it has to be over that. If they've earned £25,001, they would pay 9% of £1 split into 12 months. Obviously, they would round that up in that case. But if they earn £28,000, if that's their first salary out of uni, they pay 9% of £3,000, the amount over 25,000, so 3,000 there, which is about £22 a month. And then you can see in increments how much it goes up. If at any point their income falls below £25,000, so either they're out of work or they get a lower paying job, then repayment is paused. And then it starts again when their income goes over the threshold. And the repayment period is 40 years. After 40 years, anything left over is written off and there is nothing more to pay. The loan doesn't affect credit scores. It does not count as a loan for credit score reasons, and it can also be paid back early if they decide that they want to pay a lump sum off at any point. Then they can do that without a penalty. So this is just obviously a more work through example than the brief one I just gave you there. So your annual income is £33,000. You're paid every month. So that means that you get paid £2,750 a month. Your income is £667 over the threshold, because it's that 2,750 a month minus the threshold of 2,083 a month. So you pay back 9% of 667, which is £60 a month. So it's not a huge amount of money per month. Obviously, No one wants to pay, no one wants an extra bill every month. But until a student starts earning a good wage, well over average money, it's actually a fairly small amount of money per month when they are just starting out. Please don't be scared about borrowing as much as you need, because as we say, the repayment is based on the salary, not the amount that's borrowed. So borrowing more doesn't mean your monthly payment goes up. It means that you might pay for longer, but it doesn't affect the amount that you pay per month. So whether you borrow 20 grand or £1 billion, if you're earning £35,000 a year, you'll be repaying an annual payment of £900. So please don't think, oh God, I can't borrow the amount that I need because when I graduate, I'm going to be paying hundreds and hundreds back a month. It doesn't work like that. Interest rates, not so much of an issue until recently, but they of course have become something to keep an eye on recently. So interest, the loans do attract interest. Interest is charged from the day they make the student loans company, Student Finance England, make the first payment until the loan is being repaid in full. And the interest rate is currently based on RPI, like a lot of interest rates are. And the interest rate is applied it's determined once a year in September. It uses RPI from March in that year. Um, and the government have now capped student loan interest in line with market rate inflation to obviously stop the situation that we had a couple of years ago. Um, and from 2027, the repayment threshold will be adjusted annually, so you're aware. You can always check the current rate by going to the government website. And just a little note on that as well. You'll see that these student loans here, the student loan that your young people are going to be taking out is called a Plan 5 student loan. That's because different student loans from different years have got different numbers. So if you go all the way back to student loans from from the 90s, then they're Plan 1 and then Plan 2 a bit later, Plan 3, Plan 4. But just ignore those. You're looking at Plan 5. So after that sort of slightly miserable talk about money, let's look at some nicer things. Some money that you can hopefully get for free to help you along. So, good news, most universities do offer a range of scholarships and bursaries to students with disabilities, students from difficult financial backgrounds, or students from underrepresented groups in higher education, and they are usually they don't have to be repaid. That is money that's given to the young person. You can't apply for scholarships or bursaries via something like UCAS, unfortunately. They do have to be applied for via each individual university. So this is best to look at once a student's decided on their firm choice, because they can look at what's available from their particular uni. There's often an application of some kind, where sometimes they will have to provide evidence again of household income or other bits and bobs. There's this really good website here called the Scholarship Hub, which brings lots of, as it sounds like, scholarships together, and you can search that for different things. So that can be quite a good place to start to try and look at different scholarships available. I'm not going to go through these, but there are just some they're just examples of scholarships that are available from different universities around the country. If the student is doing a course related to a career in the NHS, so something like midwifery, for example, they can apply for an LSF, Learning Support Fund, which is worth up to £5,000 a year, plus any costs that they incur from going to placements. So that is definitely worth a look out. And there's a nice UCAS link at the bottom there about scholarships and grants. If the student has a long-term illness or a mental health challenge or any other disability, then they can apply for DSA in order to cover any extra costs that are arising from that disability. So things like equipment or interpreters or travel costs or more printing because it has to be large font, things like that. And there's more information about DSA on the government website. Please do check that out if you think it might apply. If the young student has an adult dependent on them as well, so an adult who is dependent on them, then they can, financially dependent on them, that is, they can apply for an adult's dependent grant as well. So it's the end of September, you get to university, you've got 3 grand in your bank, 3.5 grand in your bank account. What do you do with it? Hopefully you manage it sensibly. So the maintenance loan, just to give some examples of what that money is intended to pay for, the biggest expense by far to any student is going to be their accommodation, and that should obviously be prioritized. But they will also need to pay for other things. So they are going to need to look at budgeting. So things like study materials. There might be some provided by their course, but they will often need to buy their own books, and they will often need to do their own photocopying. They will need to pay for their own travel, food and drink, phone and internet. Now, Wi-Fi is often covered and included if they live in university accommodation, but do check. It won't be if they live in private accommodation. Anything they want to do that's not learning, they will need to pay for. Please do consider getting contents insurance, especially for high cost items such as phones, laptops, and tablets, because things can get broken or unfortunately go missing. Media entertainment and subscriptions will need paying for. And if they live in private accommodation, they will need to budget for bills. So again, if they live in university halls, then things like your gas, electric, water will be covered. But if they're renting privately, it likely won't be. And any other costs as well incurring from not living at home. So it is worth doing a little sort of experiment or having a little chat about things that cost money at home that they might not be aware of because obviously you've been paying for it up until this point in most cases. As I said at the top of the presentation, but just worth repeating, is that that maintenance loan is paid directly into the student's account. So they have to set up their own standing orders, direct debits, pay their own rent, deal with all that kind of business themselves. They can't get an advance on the loan for any reason. So even if they spend all their money, they can't ask student finance to give them next term's loan early. They won't. If that does happen, all universities have hardship funds. So they should speak to student support, student services if that does happen. But they are loans and they will need to be paid back. So it's not a gift, sadly. Um, and do have a look at student bank accounts. They usually have a really large or comparatively large free overdraft facility. But do be aware because after graduation, that free bit usually switches off immediately, and any money they've got in that overdraft, which can be up to a couple of £1,000s, will immediately start accruing interest. And those student bank accounts the overdraft can often be restricted for the first term or first year. So it might be that the account offers an overdraft of up to £1,500, but for the first year, it's only £500. So have a look. Paying rent. As I said, the biggest cost that student will have, and unfortunately, in some cases, their rent cost may be higher than the amount of maintenance loan that they are granted. So please do look into that at this stage of the year. The average rent for university-owned accommodation is just over £7,000, but it can rise considerably in London, hence that bigger maintenance loan. Um, Students don't have to live in university accommodation. I would advise it where possible in the first year where you can get it because it is a really good way to make friends and to socialize and get used to living away from home. But depending on the university, they may not have enough accommodation available, or the student might not want to live in the accommodation that's available. If they do live in private accommodation, expect to pay 4 to 6 weeks rent as a deposit. University accommodation sometimes has a deposit, but it will be a lot less than that. It won't be a sort of month and a half's rent like private accommodation. If they do decide to take a private rental agreement, they will probably need a guarantor for that. As I said, bills often covered by uni accommodation, not by private. If they do live in, well, halls or private accommodation, all accommodation that only has full-time students in it is exempt from council tax. So that is worth remembering also when they get into their second and third years, if they do move out of halls. And do check the length of the accommodation contract. Private accommodation contracts with a private landlord will be the full year, 52 weeks a year, but some university accommodation is only term time, with the expectation that students will leave and go home during the holidays, which obviously is possible, not always possible. So do check the length of the contract, especially of university accommodation. Travel can be a big cost, just to bear in mind. I absolutely recommend getting a 16 to 25 rail card. It's £35 a year. A lot of student bank accounts give you one for free, and it gives you a third off rail journeys. So it pays for itself really, really quickly. Um, if in the unusual circumstance that a young person has a car, we don't really recommend taking it to university because they generally can't park on university accommodation. Um, have a look secondhand for textbooks to try and save money. Lots of universities have their own on-site bookshop where you can buy secondhand books, or the library might facilitate sales. Be aware of surprising expenses. I was trying to think about the things that cost me more money than I expected when I was at university about 100 years ago. And I think the two things were photocopying and using the laundrette, which I was surprised by how much it cost. Um, Obviously, in terms of media subscriptions, password sharing has now been clamped down on by a lot of things like Netflix, and you can't do it. But they do allow you, in a lot of cases, to add an extra account for a smaller cost per month. So Netflix, you can add a secondary account for £5 a month, which is quite a considerable saving. And things like Spotify Family can save you quite a lot of money. So even just there, between Netflix and Spotify, you could be saving sort of £25 a month, just on those subscriptions by doing it that way. Please do talk about these things before your child goes off to university because it can be a horrible shock, and it's scary to run out of money. This last bit then is not sort of not intending to be negative, but it's just to cover something that often isn't covered in these sorts of conversations. And that's what happens if you decide to withdraw from university for any reason. Whether that is that you choose not to continue your course, you can't continue your course for whatever reason, you don't graduate. I just wanted to spend just a couple of minutes going through the what happens in those circumstances. So what happens in those circumstances is you have to pay back everything that you've borrowed. Even if you don't graduate with a degree, you've still borrowed the money and had the tuition, etc. So you still have to pay it back. The first two installments of the fees loan are paid at the start of term one and the start of term two. So that so students never see this. This is the money that the government pays to the uni, but it's still paid in three installments a year. So term one, term two, and then a big chunk in term three. So the reason this is important is if a student withdraws from university, they're always charged for a full term. So for example, if university begins on the 20th of September and they withdraw on the 25th of September, they will owe the first full term's worth of fees. Those numbers at the bottom there, sorry, are for last year's fees. So it will be a little bit more than that, a couple of £100 more than that. If they so so if they withdraw the 25th of September, or if they withdraw on the 1st of December, they will owe the same amount of money back to student finance. If they stay until the start of the third term, they will owe the full year. So just thinking that through if that university place starts to look a little bit in danger. Usually grants and bursaries don't need to be paid back, just the fees loan and the maintenance loan. If the young person doesn't make it to the end of their degree, then they might decide to look or want to do a different degree, maybe the same year or maybe a little bit further down the line. Now, usually if they withdraw during their first year, that's fine. They can usually get full funding for another course. So for example, you get to January, you decide you absolutely hate it, you withdraw, you apply for another course through UCAS in January, that is fine. You will usually get a loan that will cover another full degree. However, if they drop out in the second or third year, they might not get full funding for a second degree. So that is something to think about in that case. The things that negate this are if there's compelling personal circumstances, so illness, bereavement, and all students are entitled to a year of bonus funding as well. So, for example, if you get to November of your third year, you're suddenly really ill, you're in hospital until February, so you miss a huge chunk of your third year. That means you can't graduate during that year. You can usually take the rest, you'll be able to take the rest of that year out and then start your third year again in September, but you'll still get another year's worth of funding. You get that grace in case anything goes wrong. And it is worth remembering that you can usually suspend your studies instead of fully withdrawing. So if you're at university, it's not going how you planned, you're finding it difficult, you're not enjoying it, please speak to student services. Please don't just stop going to class or go home. Please do speak to student services and they will help you. And there's a link to UCAS at the bottom there with some more information. So, in summary of everything that I've covered in the last sort of 40 minutes or so, there are two types of loan that students can apply for. The tuition fee loan, which is not means tested, and the maintenance loan, which is means tested. You only start repaying when you earn over £25,000 a year, and if earnings go below that, payments stop. To get the maximum loan, students need to be means tested based on the household income. The fee loan goes straight to the uni. The maintenance loan goes to the student. There are some bursaries and scholarships available, which students will need to research themselves. If you drop out, you have to pay back everything that you've taken out, all loans you've taken out up to the point that you leave. And you apply for student finance via the gov.uk website using that link, gov.uk/student finance. So this is my email address. If you have any questions at all about this or about any bits of UCAS or pathways or whatever, please do feel free to email me, including sort of if you've got specific questions about your own personal circumstances, do email me. And if you want the slides, email me and I can send those over to you. I'll just leave that up there in a sec so you can copy it down. My email address is also on the I think it's on the contact us bit of the LeSwap website as well. It's definitely on the key staff page of the LeSwap website if you ever need to get in touch. And finally, at the end, there's a nice list of helpful links there, bits from the government, bits from the student room, which break things down nice and easily, Scholarship Hub, UCAS, some social media links. The Money Supermarket link there, Martin Lewis has done loads of really informative, good stuff about student finance that breaks it down really easily and really sensibly, and the student toolkit at the bottom. So I'm just going to have a sec, and then I am going to have a look in the Q&A, and I'll answer any questions that are in there. Sorry about the light now turning into a halo above my head as it's got dark outside. It's a little bit hard to see. Right. Okay. So first question is where will the recording of the call of this be accessible from? So we have a YouTube channel, the Swap Consortium. All our webinars go on there, and they will also be linked to from the webinars page of the LeSwap website. So if you go into the LeSwap website, if you go to Parents and Carers, there's a webinars page under there, and the link will be on there. Hopefully from tomorrow, if I can get it up tomorrow. I think a few of these questions I think a few of these questions I've already answered, but just to reiterate, just in case, information on interest rates, it is linked to RPI, and the exact rates are on the link that was in the presentation. And do you need to have accepted offers before you apply? No, you don't, because you can change the university or the course code at any point up to starting the course. So let's just read into these. Sorry. How does switching universities work? So, for example, if they're going to university and they realize they don't like it and want to go to another uni. That is, so in two different senses there. So from a finance perspective, it would be that you usually can't, you wouldn't be able to carry on in the same year. You would stop that course, say in January, February, for example, restart another course in September. So you would need to reapply for student finance in that year with your new university details on. And as I've said, if that happens in their first year, they'll usually get a full loan for their second course. If in terms of switching unis, that in terms of how do you apply for the courses and physically and actually switch the universities, that you will usually need to put in another application through UCAS, so withdraw from your current course. Sometimes you can contact a university and ask if they will do an in-course switch. That might be the case. But if it is, say, you're doing history in Leeds, you want to do psychology at Manchester, that will mean withdrawing and reapplying. For the maintenance loan, can students take only some of the money offered, even if they are eligible for more? Yes, I believe they can. They can choose they will be offered an amount and they can choose the amount that they take. My daughter is applying and asking to defer. Should you apply now and defer student finance application when deferral agreed? No, if if she is definitely deferring, if she's 100% deferring, wait. If she is asking to defer and there's a chance that that deferral won't be granted, I would recommend that they do the student finance application now and then pause it until next year. So guaranteed deferral, wait until next year. Not guaranteed deferral, apply now. Uh, so a couple of questions about the amounts of the loan. The maximum loan is £10,000 for living. Child qualifies for about four. If parents top up the six, will that be sufficient? That really depends on the where they're going. So whether going to university, whether it's whether they're in a city and they're going to be spending lots of money on kind of social things, or whether they're going to be living somewhere outside the city, what their hobbies are, if they've got expensive hobbies. It really and it really depends on the student. But the main thing it will be the rent payment. So when you're looking at whole at student accommodation, for example, have a look at how much that accommodation is, because that will be by far their biggest expense. Universities usually offer a range of accommodation at different costs, so you can keep the cost down by selecting cheaper accommodation, but that will be the main thing to look for. Please feel free to leave now, by the way. If you, thank you for sticking with me for nearly an hour. If you need to go about your evenings, please do. I'll just finish answering questions for another 5 minutes or so. Thank you very much for coming, everybody. Uh, my child hasn't been offered any university places yet. Do they still need to apply for a student finance loan now? Yes. If they want to go to university in 2025, yes, please do apply for a student finance. Please do apply for student finance. Put down the university that they want to go to. They can always switch it later on. And if for any reason they end up, as I said, not going, they can just cancel the application. My son has been offered a scholarship for almost half the cost of the fees. Amazing. We'll probably be entitled to a bursary. Will the fee loan will be the rest of the cost? So yes, so the government, student finance will make up whatever the rest of the fee loan would be. So the fees are 9,535. If they got a scholarship for £5,000, for example, the Student Finance England would cover the extra bit up to 9,000. 535. So they wouldn't still be entitled to the full fees loan if the university are paying part of that. It would be a top up. Nearly there. So last one I've got at the moment. What factors should a young person who's in the process of applying for a deed poll, a name change, be aware of in regards to student finance? So that's actually not, I actually don't know. I'm really sorry about that. Um, I would suggest that if they can, they wait until the deed poll is completed to apply for student finance. But I do apologize. I don't know the answer. I will look at if you want to email me with your details because it's come up as anonymous. I will be happy to look into that for you, but I can't give you a definite answer right now. I'm afraid. I do apologize. And the final question, I'll take this as the final one. Unless we get anything in the next couple of minutes. Help for low income families. So the help there is the extra maintenance loan based on because it's linked to household income. And then particular universities might have scholarships or bursaries specifically for low income families. So just thinking about some I know, for example, obviously they're a very elite university, but both Oxford and Cambridge universities, for example, have really considerable bursaries for families within and those bursaries are available for students who have family incomes of up to £40,000, but they're specifically aimed at students with family with household incomes of less than £25,000. And other universities have a similar thing, but that will be you will have to check on a university by university basis to see if they offer anything. Some do, some don't. Uh, we do get one more final question, and then I will let you all go about your lovely evenings. A young person with diagnosis of autism, will they be able to get DSA? I don't know. I'm afraid that you would have to apply for DSA through the government and see if they are entitled to it. I'm afraid I don't know exactly what the criteria is. Fantastic. Thanks so much, everybody. Thanks for giving up your evening to come and listen to me. And please do get in touch if there's anything else I can help you with. Have a great evening and see you all soon.